Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. But most people think the bank has their money if you ask them. Yes. Okay, so the question is, would it be the same if everyone knew what they were getting into when they joined fractional reserve banking? In general, though, they don't really want you to learn. Yes. They probably don't want you to. But I think you could make the case that a free market is better than a nationally controlled price for money, especially when it's an educated free market where people know what they're buying. Okay, do you think that in the long run we will end up in a place where there are no central banks? I mean, if that's more likely the more popular Bitcoin is, I don't know. I believe it will happen in 5, 10, or 15 years, but I think it's possible over a long period of time. That's why I'm not as interested in groups like the Fed. Instead, I want to build an alternative and see it beat the Fed. In June, Bitcoin may be down about 3.2%, but things could change before the end of the month. Tento Macro looked at how the Federal Reserve's financial conditions affect Bitcoin and found a strong link that has been there for a while. The link between Bitcoin and Fed liquidity never ceases to amaze me, Tento Macro wrote in a remark on X that went with the article. In 10 days, liquidity will hit its lowest point. After that, it will tear back up. Prepare. A graph from Talking Macro, Tento Macro's own data source, showed that the highs and lows of the Bitcoin price were in line with the local highs and lows of Fed cash. There was a lot of money flowing into Bitcoin even when it hit its most recent all-time high of $73,500 in the middle of March. To make things clearer, Tento Macro stated that the number comes from a mix of Fed assets, repo markets, and treasury data. Talking Macro also talked about Bitcoin's short-term problems, pointing out a new drop in money coming into U.S.Spot Bitcoin Exchange Traded Funds, or ETFs. In early June, they had their second highest daily inflows on record. However, the trend has changed, and over the last 4 Wall Street trade days, money has been leaving the markets. Monitoring tools, such as those used by far-side dealers in the UK, showed that the outflow over the last 4 days was just over $700 million, which is still less than the inflow of $4.886 billion in June. People are getting more and more excited about a new wave of business interest in Bitcoin that will happen in the third quarter and beyond. It is expected that U.S. wirehouses will be able to access spot ETF products. This is a key event for people who want to keep an eye on Bitcoin's growth into an institutional heavyweight investment class. Cathie Wood is one of them. She is the CEO of ARK Invest, an asset manager and one of the best ETF providers. In March, she talked about U.S. wirehouses and said, "We haven't even begun because no platform has approved Bitcoin yet, so all of this price action has happened before they approve it." There isn't a lot of demand for Bitcoin-denominated loans, and when there is, it's usually for leverage. So that shouldn't be a problem for a while. As an example, you could borrow Bitcoin and then buy Grayscale with it. That's an old trade from a long time ago. A Bitcoin loan isn't very useful for business when the price of Bitcoin changes so much, so I think it's less about that and more about things like exchange hacks, ownership hacks, and so on. For instance, I don't think Fidelity or BlackRock will necessarily fractionally hold it or rehypothecate it, but it's possible. For me, the bigger risk is probably the government taking it away. If everything is gathered into a few big buckets, they can say, "Look, these things can't be withdrawn from that account anymore." And they can make up a reason like it's 6,102 in our Bitcoin, yes, or at least saying it's walled off in Bitcoin and we can't let it out into the wild because of terrorist financing or whatever reason they can give is probably what I would see as the bigger risk. I don't care as much about how Fidelity or BlackRock handles their Bitcoin. I worry more about what they might be told one day to do with it. They want to steal it, right? The reason being their own business is bad? Their own money is messed up? It's possible. That could be the reason. It's also possible that, as time goes on, the financial systems become more and more watched and managed, and they don't like Bitcoin running freely very much. It's tougher for them. Bitcoin that floats. Bitcoin that floats. So they could eventually stop that, especially if something bad happens and people get very emotional about it. For example, imagine if 9/11 was a very sad event, but they were able to easily pass the Patriot Act and get people to want to go to war with a country that wasn't even involved in the attacks, like Iraq. What if there's a big event like that, and they say, "Hey, we need to crack down on Bitcoin, it can't be used to fund terrorism, or this, that, or the other thing." We need to have more power over this. You can also find a reason to block the doors. Even fair financial abuse. For instance, when Argentina has a currency crisis, They pass laws that say banks and even fintech companies can't give it to their customers. They never say it's because of the currency problem. People say, look, it's money laundering and AML, and we need to keep banks stable. They'll use a lot of jargon that sounds normal to explain why they can't do it. Realists know that they don't want to do it because they want to slow down their currency problem. And you can see that in Nigeria. That's clear in Turkey. They usually say something like, we want to do safety and stability, or they'll say they blame speculators. Which means that people are betting on the currency, so they'll try to stop the exits and make a certain group look bad. So I am worried that in many places, one day, a government agency will take over those big Bitcoin honeypots. Yes, I believe that gives us some interesting price cues. However, I believe that part of the problem is that people don't fully understand the risks they are taking. So DeFi is safer for the borrower but very illegal for the loan because there is both liquidation risk and hack risk, which I think is something that gets missed a lot of the time. That means the price isn't always right. Also, I think that the Bitcoin collateralized loan rates will likely go down over time. This is because there is no rehypothecation in the ones that work right, like Unchained. Oh, those have really low loss rates. That is 0 most of the time, since the Bitcoin is your full security. The market is open. Really, the only way you could lose money as a loan is if the price of Bitcoin drops in a way that makes it hard for people to buy and sell. In other words, it would lose value so fast that you couldn't even sell it as collateral to get the loan back.